All right. Looks like almost a full house, starting of the Bitcoin stage. I think it's a great opening by Tyler and a perfect segue to kind of discuss Bitcoin as the next global reserve asset, right? So with me, I have today here David from Bitcoin Policy Institute. He's one of the co-founders there. And we have Lennix from OKX, a big powerhouse as an exchange in Asia, and now also growing globally. So I would allow you to quickly first go and introduce yourselves, and then we can kick it off with a very fascinating discussion, especially after what Tyler said. Last year was the institutional year. This year probably is the sovereign year, and I think that might be a great way to start. But yeah, first introductions, David.
Yeah, I'm David Zell. I'm the co-founder and co-president of the Bitcoin Policy Institute. We're the largest cryptocurrency think tank in the United States. And so we work with government officials from Congress as well as the White House on all things related to Bitcoin. We wrote the first and only white paper on the Bitcoin strategic reserve the day before the election in the United States, and people thought we were crazy. Maybe not. So excited to chat about the future of Bitcoin as a sovereign reserve asset.
Yeah, hey guys, my name is Lennix. I'm the global CCO of OKX. So basically, OKX is the top 3 exchange in the world, and I think we're regulators is all the major jurisdictions at the moment: US, Europe, Dubai, Singapore.
Awesome. And I'm Sagun. I'm from the Global Innovation Lab of Bank Julius Baer. It's a Swiss private bank. Happy to moderate the panel today. Let's try and spice it up as well. Feel free to go full throttle with your thought. So the first question, David, to you is, so what makes Bitcoin a credible alternate to traditional reserve assets? So we've looked at gold. We've looked at how the world believes in gold. I think gold's been doing phenomenally well in the last couple of months as well. And I think the question is, why now? Why is everybody considering Bitcoin as an alternate to gold when the gold seems to be doing amazing in these troublesome times?
Yeah, I mean, I think the emerging consensus is that the era of sort of peak neoliberal world order is perhaps drawing to a close. I think that's evidenced by a number of things. The sanctions that America levied against Russia, I think, were a real sort of Rubicon moment with respect to how central banks think about the composition of their reserves. I think that was sort of the canary in the coal mine. We've seen that since those sanctions, every country in the world that has any notional risk of being subjected to financial sanctions by the United States has been selling treasuries and rebalancing and adding gold. So it seems like a lot of the surge in demand for gold is coming from central banks. So yeah, I think that there is a sort of renewed interest in financial assets that are politically de-risked. I mean, traditionally, that's one of the principal reasons that people have invested in gold, is that depending on how you store it, lacks counterparty risk, it lacks political risk, and it tends to perform well during times of economic shock. So it's a fairly uncorrelated asset. And so to answer your question of why I think Bitcoin is a viable reserve asset, I think the simplest explanation is because it has essentially all of the properties of gold, but is more fit for the digital age. So I think I sort of look at it as a sort of upgrade to gold, or gold 2.0. It's interesting. One of the fellows at my think tank is an economist for the U.S. intelligence community, and he published a white paper with us back in October entitled "The Case for Bitcoin as a Reserve Asset." Obviously, his views do not represent those of the United States government, But it's a very interesting paper nonetheless. Prior to working for the intelligence community in America, he was a economics PhD at Harvard. And it's a short paper. It's like 10 pages on our website. I would recommend reading that if anyone is interested in kind of a more formal dive into the question. But yeah, I think in brief, Bitcoin does everything gold does, but better. Like, try sending $1 billion worth of gold. Like, what are you going to do? You're either going to send a paper claim to gold, and you're not actually moving a bearer asset, or you're going to hire private security, load up a plane, and fly bullion. With Bitcoin, I could move $1 billion halfway around the world in 10 minutes for $1, and that's pretty wild.
Yeah, thanks. I think you bring up an interesting point of view, which is composition will also play a big part. So I think, Lennix, we could probably get your view, like, is Bitcoin going to be the ultimate replacement of gold standard, or will it be a composition? How do you see, give a rebuttal to David, on that point of view?
Yeah, before OKX, I was a gold trader. Yeah, and commodity gold traders are maybe a lot of people not understand what the gold that we're trading today. It's not exactly physical gold as in compared to Bitcoin. We're trading paper gold. A kind of like a derivative contract and agreements across the group are for gold. And which physical gold is stored in some kind of New York vaults and all kind of gold vaults everywhere. So in order to compare, if you think about central bank perspective, if you want a hedge on liquidity and hedge of geopolitical crisis or instability, especially in Europe perspective, you're putting a majority of your gold reserve in New York, and which somehow you have absolutely or a lack of transparency compared with Bitcoin, right? And in terms of custody, in terms of whether or not this physical gold has been collateralized and doing something else, we don't know. So I think with the political decoupling across the group, people are starting to at least realize I need to diversify our strategic reserve of my currency, because after the trade war, everyone is thinking about currency war. We need to devalue currency to counter tariff impact. So the next step is I need to build a relatively diversified reserve. So I'm not sure whether or not it will be replacement, but I'm very sure that people are starting to recognize Bitcoin as a digital gold is actually a better form of gold, much more transparent, even in a central bank perspective.
Interesting. Yeah, I mean, this whole angle of currency devaluation, especially in this whole tariff play that's currently everybody's experiencing. It's on the top of the minds of everyone. This fundamental question, whether Bitcoin can actually become this gold reserve standard equivalent, and I think a lot of probably in the audience would have this question. Bitcoin was funny internet money, right? That's how it was. It's been known. It's understood. This funny internet money suddenly starts becoming the reserve standard. Like, how would you kind of slice and dice this for a first timer who's hearing this to kind of understand and digest this, that, why would only Bitcoin get this stature? Why not any other crypto? What's so special and unique about Bitcoin that, the world is going after Bitcoin to make it as a reserve versus any other currency? Because last year we saw a lot of ETFs come for Bitcoin, but this year we're seeing other cryptos also have their ETFs. So are you saying that next year we'll see some cryptos also getting kind of considered again for a strategic reserve, or is it just Bitcoin in particular?
Well, I guess there's sort of two questions there. The first is, why Bitcoin? Why is it enjoying this stature as opposed to other digital assets? And then the second question is whether the U.S. may include other cryptos in a strategic reserve. To answer the first question, I think it's because of Bitcoin's innate properties. When we as humans were developing money, we could have chosen any precious metal, and we sort of did. There was people use silver a lot more. We could have used platinum as our major, precious metal. So I think part of it is sort of memetics, that the narrative around gold was good, but it also has sort of a set of properties that make it very useful as a money. So I think it's a combination of sort of intrinsic properties and the sort of stories we tell about those properties. I guess notably, gold has a degree of intrinsic value in as much as it's used for things like jewelry or circuitry. And Bitcoin, of course, has no intrinsic value. So I think it's the sort of set of properties that Bitcoin has, its verifiable scarcity, its reputation as the most decentralized cryptocurrency. I think the circumstances of its founding play a huge role in the narrative that it enjoys. The anonymous creator or creators plural. It was sort of the genesis of this whole thing, and you can't really reinvent that. Right now, it doesn't seem like the U.S. government is going to pursue the purchase of other digital assets. In fact, the executive order that was signed by President Trump makes that pretty explicit. So it created a strategic Bitcoin reserve and a digital asset stockpile. With respect to the former, the Treasury Secretary and Commerce Secretaries are ordered by that executive order to pursue net new acquisition of Bitcoin, so long as those purchases do not come with incremental costs to taxpayers. With respect to the digital asset stockpile, the executive order explicitly states that absent additional executive orders or legislation, that no cryptocurrencies will be added to that stockpile. So is it possible? Yes, I guess anything is, but it does not seem likely in the near to medium term that anything other than Bitcoin will be purchased by the US government.
Very interesting. So 21 million cap, that's the first one. That makes it scarce. The second one is audited every 10 minutes. So it's verifiable. Permissionless by anybody. So you can just buy a node, Bitcoin node, or set up your own node to actually verify your own Bitcoin. So that's powerful. And the third one is obviously that it actually improves on the properties of gold, so it furthers it up. So Lennix, maybe I tease you a little bit with a question on the political side. So you meant in your previous comment, you said that gold probably, if all the gold is in New York, then it is probably political. Well, he's talking about the executive order here, David. We're talking about US making a first move to actually go and create a big stockpile of Bitcoin by purchasing it. And the first mover advantage might end up creating a political scenario again here, because all the major Bitcoin might go and live in US. So how do you kind of respond to that thought process in terms of comparing it with gold? Like, it still looks like it might go political. Do you believe so?
I think because of the executive orders, all the other central bank in the world will start thinking about, if I want to at least follow a portion of the action, probably not at the time to stop buying it or accumulating, but at least not selling. I can see China, I can see maybe US, at least stop selling after they, I don't know what, wherever law enforcement accrue Bitcoin. So whether or not it would be start accumulating and diversify the central bank reserve, it's very likely, but it's take time to see, because of the uniqueness of the Bitcoin compared with other cryptocurrency. Is not just on the proof of work mechanism. It's a battle test, consensus, and debates, and community and diversification for at least 10 plus years. And have been withstand for different kind of debates and fights and liquidity for different for miners, from Bitcoin developers, and for users. And it's battle test. That part of 10 years consensus is very difficult to replace and very unique compared to other crypto.
Amazing. Yeah, I think you bring a great point there, Lennix. I think so. Last 10 years, Bitcoin hasn't gone down. 100% uptime for a software, unheard. It's like a digital living organism whose heart has been throbbing every 10 minutes consistently since the last 10 years. And this is, consensus built, like it's distributed. I'm not talking about running one server. It's like a collection of a network. So yeah, I think that's also a great point to kind of highlight that. So moving on, maybe David, I could kind of touch upon a little bit what earlier Lennix mentioned, like can Bitcoin really hedge against currency devaluation, especially in this geopolitical instability that we're witnessing with this whole tariff wars unleashed, especially from the US side. So how do you kind of see Bitcoin playing a role for different countries trying to manage this challenge?
Yeah, I mean, look, I think a core tenet of sort of modern portfolio theory is, the idea of diversification. And so when you're talking about composing a government's reserves of assets, you want to find things that are uncorrelated to other things. And so I don't think the idea is that governments are going to just sell all of their gold and replace it with Bitcoin. But to the extent that you choose to hold gold, your portfolio will probably, under modern portfolio theory, perform better if you have some, say, 2 to 5% allocation to Bitcoin. We've seen, in a couple instances, Bitcoin respond very well to certain types of risk. So after the Russian invasion of Ukraine, Bitcoin performed extremely well. During the Silicon Valley bank crisis, Bitcoin performed extremely well. So I think that there is a set of risks that Bitcoin can sort of hedge against in theory, but I'm not sure that it's like one particular risk. I think it's a lot of things. Currencies collapsing, geopolitical conflict, sanctions, etc. I mean, one reason that a government may choose to hold Bitcoin is if they believe they're going to be sanctioned by the U.S. government. Bitcoin is, of course, transparent, but there's no way to impede on one's ability to transact. And so you may face consequences for an illicit transaction if you are a nation state, but you can still make that transaction and deal with the consequences later. So I think it's less like one specific thing and more that from a portfolio optimization perspective, I think at this point it's sort of imprudent to not hold some nominal Bitcoin position. So yeah, if you're going to hold gold, it's crazy to not have some Bitcoin as well, because it's not super well correlated with gold either.
Lennix, your point of view on the devaluation of currency?
Yeah, I think Bitcoin currently is highly correlated with Nasdaq. Currently, only. I think I remember the last 2 days, U.S. market crash, like 4%, but Bitcoin like up 1%. I can feel, that's my hunch feeling, that's a Bitcoin was starting to decouple with Nasdaq because of the tariff of trade war. After tariff, I think everyone needs to, the other country, the manufacturing country, for example like China, was starting to, or with a time to depreciate its currency against the impact of the tariff. So people are starting to derive its currency at a global scale against US dollar. So in that case, people will, or maybe on 1 or 2 days, or one or couple of periods, people are starting to realize because it's actually a hedge against currency devaluations, the current the current geopolitical instability is kind of hedged by gold at the moment. So you see Ukraine war, or Russian war, or Israel war, you can see gold spike. But I think starting from this 1 year, we're starting to see more devaluation in global currency. The market was starting to realize, hey, Bitcoin is actually a hedge against currency. It's a good hedge, or a hedge against global liquidity. So to your point, to sum up is, probably I don't see a geopolitical hedge, but it's a hedge against liquidity crisis.
Great. So that explains why gold has been going up in the last 3-6 months, and
Bitcoin will be catching up.
Okay, so Bitcoin's starting to do that decoupling effect from the stock markets and might kind of...
Now, as a tariff starting to have impact against currency across major economic, Euro and JPY and Chinese yuan, and people are starting to realize that the gray hash on these local currency is actually Bitcoin. So we're starting to pick up after turmoil.
Great. So there are signs of decoupling. Watch out, guys. I think Lennix is kind of trying to highlight that you might start witnessing this, that Bitcoin starts behaving a lot like gold as well. So there is why probably there are signs there. So maybe we follow on with another interesting take. So okay, let's agree upon that. Yes, Bitcoin has the potential to become a strategic reserve and the reserve standard. So then let's talk about some challenges. Like somebody in the audience is probably thinking right now, but still Bitcoin looks very volatile. It's differently treated in different jurisdictions from a regulation standpoint. And then there has always been a question of scalability. How do you see these three challenges of regulation, scalability, and also kind of volatility as kind of being a party pooper and not allowing Bitcoin to become the strategic reserve or reserve standard?
Yeah, well, I think the regulatory risk, at least in the United States, is now effectively zero. I think for a long time, that was one of Bitcoin's greatest risks, was governments deciding to ban it. Obviously, anything is possible, but Bitcoin has never been more de-risked politically than it is right now. And I think that other countries will start to probably follow, to some extent, the United States' example on Bitcoin. Volatility, I think from the perspective of a central bank, is less important. When you're talking about sort of a nominal position, like 2%, 3%, 4%, you don't really mind volatility. You're not exactly in desperate need of that liquidity. I think that's maybe more of a deterrent to maybe individual adoption. But look, Bitcoin's volatility has dampened significantly since it was created. And ultimately, I think it's a knowledge diffusion problem. Like, the reason that Bitcoin isn't decoupled right now is not because of any innate property of Bitcoin. It's because of investors' beliefs about Bitcoin, which are informed by their understandings of Bitcoin. So for the three of us on this stage, we already treat Bitcoin like it's decoupled. And so that decoupling process, it's not a technological thing. It's just a knowledge diffusion thing. And then the scalability question, yeah, I mean, look, it's plagued Bitcoin since its existence. I think that Lightning is still promising, although it's not maybe doing what people hoped it would when Lightning first came out. And I think that there is, to some extent, maybe a tension between the sort of digital gold and the peer-to-peer electronic cash narratives. But I would say the quick synthesis of that is that historically we've seen things become a store of value first and then a medium of exchange later. So my directional bet is that as Bitcoin's knowledge about Bitcoin rises, the price will rise, the volatility will dampen, and as the volatility dampens, it will be more widely used as a medium of exchange, though I don't think that specific property of Bitcoin is requisite for a nation state to prudently decide to buy some.
Your take, Lennix, on these three challenges: volatility, scalability?
Yeah, actually, I agree with David on the knowledge diffusion part. So I think the challenge of Bitcoin is whether or not Bitcoin essentially become a strategic reserve for not just central bank, but everyone. Listed company, or anyone with treasury reserve, or just individual. A hash or a portion of hash, a storage value for part of your wealth. It's become a knowledge to everybody. We fix regulation. Volatility is going to be fixed by different kind of instrument, exchange or volatility or options or derivative instruments. We also fix, we kind of have a lot of debate in scalability before, big blocker debates, but turn out that's even more important is the conceptual influence in culture in terms of Bitcoin, whether you want to own a Bitcoin for part of your personal disposable income as a protection.
Interesting. I mean, you both kind of touched upon how, you know, it's a knowledge diffusion problem. So I think each one of us need to go kind of down the rabbit hole to kind of debunk our misbeliefs around this new order of the day in terms of Bitcoin becoming potentially a reserve asset across the world. So I think that's very, very well put. Knowledge diffusion is an issue. So maybe it's you who's not looking at it seriously enough, and you need to spend the time. So that's the message there from our panelists. Okay, so in the next 5 years, will Bitcoin replace, coexist, or complement gold as a composition for central banks along with precious metals? What's your take? So I know US from a perspective of the executive order, so they've kind of put their clarity right out there. But how do you see the world playing out? Like, how fast do you see like the other countries will follow through in terms of central banks adopting this? So what's your prediction for the next 5 years beyond US? And maybe Lennix, then you can take up the same question for other major countries. How do you see that playing out? Is it going to be a FOMO situation?
I mean, look, I think the average consensus view is that the American Strategic Bitcoin Reserve is just kind of bluster, and that they're not serious about it. I think once the United States government actually buys additional Bitcoin, that's going to set a really, really wild and rapid race. I think that's kind of how would you say it? The fireworks have been placed, the fuse has been laid, and we're sort of standing there with like the match over the fuse. I think that spark will be the net purchase of new Bitcoin. I think that most market participants are not pricing that in like at all, and think that Trump is joking. I can tell you from my work with American policymakers, he's not. I think they're going to buy Bitcoin. I think they're going to buy it soon. And I would be shocked if the world ignored that.
Quick 2 minutes take from you, Lennix, on the same point.
Yeah, I agree. I think at least as a point of view, all other central banks would kind of follow. So people are feeling are kind of afraid for lag behind before US start buying. If it's gold 2.0, I got at least 1 or 2% at the pension fund according to a countryside. I think it makes sense for a central bank.
Very interesting. So it's happening. The question is, when is it happening for your country and jurisdiction? That's the final take on this. So it was a great panel. I think we summed it up very well. Thanks, David, and thanks, Lennix, for your amazing point of view on the next reserve standard. Thank you.
Thank you.